In this video, we are going to be analysing Goldman Sachs, ticker GS. Now, obviously, markets have just closed because it was a half day today, considering Thanksgiving was yesterday. But into the important things, obviously, we closed up just over 0.5%. But what are the key technical levels that we're paying attention to? So, obviously, on the left, we use a 180-day, so a 6-month chart. On the right, we use a 1-year chart. Now, what we're really seeing is this year, strangely enough, Goldman Sachs is actually outperforming other banks, even like JPM. JPM's down on the year, or in the past 52 weeks. Unlike Goldman is actually up. So seeing all that, interesting to see. But what we have currently encountered is, on the 1 year, we have recently broken over our second deviation, which again, when you're above this level, you are considered very overbought. And again, usually expect to see a bit more of a pullback. But what we saw happen with Goldman is broke above, came back to test it as a support. And again, this is one thing we always say. If you go and check any of our analysis videos, we say we want to see that retest. If you get that retest and it holds, what does that show us? It shows that that level is held, and more than likely we are going to continue up to the upside. And considering we already hit that second deviation, and that's when we got the original pullback, again, this trade would have played out well. You got that, and this is, again, things to acknowledge, because this is how we always look to trade these levels. If you're trading the pullback, you tend to trade it to your closest level. Again, locking in profits along the way, but that's what you got. This one probably would have failed, but if you traded off this level, again, you would have made back your losses from that and some, because obviously you're going to be having better than a 1-to-1 risk to reward. And again, you would have had your target. That would have made a max profit trade. Now, played the pullback, came back, it's held that level as a support. Now that level's held. Again, we're more bullish on it then. That level's held. It's a good indication we will continue higher. So now, if we continue higher, what are our targets? So 407 to around 409. These are our third deviation on both the 6-month and the 1 year. And really, if Goldman continues up, this will be really my final target. By that, I mean, I don't think we would go any higher than this. If we push to this level, this is definitely where I would be entering a short position. Probably shorting through some shares. If I've got, I think I hold actually some of the investment portfolio. Probably look to sell out or sell some covered calls at basically a strike we're at now, because again, premiums will be high and I'm not expecting it to stay at that level for long. So that's one way I'll be looking to trade it on the investment side. How will I be looking to trade it, or as more of a short-term trade? So coming into that level, again, I'll be probably just buying outright puts, or depending on the premiums, if they're expensive to take the puts, which I don't imagine they will be, we can trade them through a debit or credit spread, because then again, we can just have a strike, say at 410, as long as it closes below their expiry, you make your max profit. And again, we would expect that to happen. We don't expect it to trade above that level, if at all, but even if it does, not for long at all. And again, or we could just short the outrights, but considering these shares are quite expensive, obviously being 400 a piece, it will be quite expensive to short. And again, whenever I'm shorting anything with outright shares, I like to hedge with a call option. And again, they'll probably be quite expensive, just considering how expensive the actual stock is. So I'd probably have a stop around, a call option to hedge around 415, 420. But there'll probably be a few $100 just to be able to hedge it. And again, it's just going to be an inexpensive trade to hedge it on the outrights. That's why I'll probably be looking to trade it as just an outright put or through spreads. But again, if you want, when it comes to it, if we continue up, I will do it as a video, just a trade idea on how I'm looking to trade it and how I'm entering it. If we do break that though, for any reason, very unlikely, but we do have final resistance. This is at 432 and 438. Now this would kind of be our final target. Again, if it did push this level, definitely a good short entry. And if we were long for any reason, definitely an area that we're looking to lock in profits. But obviously one thing we can see, and kind of key to note, is how are we trading? How are we just broken this high? We're trading at a divergence, really dominant on the 6-month, but also showing on the 1 year as well. So ideally, we do push to that 400 to around 410. And again, I think that will provide a really strong trade opportunity, and definitely something I'll be looking to trade. And obviously, be paying attention to $400, a key psychological level. You're going to see it struggle around this level. So really, again, if I'm looking to trade it short, which personally I am, and if you are too, probably want to be paying attention to that 400, and that's probably when I'll start scaling into the position when we hit around 398. And the reason for that is, again, that could be the peak, at least for the time being. If though we do break through that level, you'll probably get that snap to the upside, and 408 will probably be that target. And again, that's where we then get in with usually the bulk of the size. So that's really the trade plan and the key resistances. That's what I'm paying attention to. If we start to decline in price, again, we'll provide you with the supports now, but not something I'm all that focused on. We do have support though at 360. 345, and then we go down to statistical means at 337 and 315. Now, through this level, again, this is considered fair value. So when you're coming into statistical mean, doesn't tend to be a level that we look to trade off of, but instead trade to. So again, if we're shorting, this is going to be our absolute final target. If we're long bias, again, we're probably not going to buy these levels just because, yeah, you sometimes get a bounce, but buying at fair value, you're really having equal risk to reward. It just seems to be taking on a lot of extra risk for not all that much reward. If we start to break that though, we do have a support at 313, and again, considering how close that is to the other statistical mean, probably not a trading opportunity. You're looking for 3 points unless you're risking $1. Really no trade opportunity there. So instead, I would be waiting for more of a harsh sell-off to around 290 to 282. This would be our first kind of strong long bias area. And if we broke any lower, we'd be looking at 265, 252, 240 and 220. Now obviously some of these levels very far off. Do you need to pay attention to all of them? No, we just like to be prepared if for any reason in the next month we sell off harsh, you have supports. If for the next week we continue bullish to the upside, again, you have levels to be paying attention to. That's why we go through so many levels, just so you don't need to pay attention to all of them. But if you're watching this video a week down the line, or you just see big price movement in Goldman, you then have levels to be focusing on. But again, how do I use these levels, and how do you probably want to be observing these levels? And it's really, where are we now? We're at 390. So my only focus is 385 and 400, well, really 407, because they're the two closest levels. So all I need to do is wait for it to really react to one. Again, I'm not looking too much onto the upside. Again, I'm more bearish. When you come up to these kind of levels, I flip more bearish. And considering the overall market is still pretty bearish, I would rather be trading it short. So instead, my personal opinion is I'm waiting for it to go to 400. If we get a push to 400, that's when I'm starting to opening up some short positions. And 408 is going to be where I can put in the bulk of that position, because I really don't expect it to go any further. But again, how would I know to get out of a position if I was short? So if we break over 408, we come back to test it as a support and the level holds. That's when I would be taking out of my shorts. And the reason for that is if we come back to test that support, and we then push further up, it showed to me that that level has failed, and more than likely we will push higher, and that target would be 432. So obviously I don't want to hold it through around 24 points being offside. That is a lot of offside. So really I won't well, that's just how I really use these levels. That's how I find my stops. How do I find my targets? Again, as I'm trading the outright options, well, that's most likely how I'll trade it. Really, I'll just be looking in, depending on how many contracts I buy, I'll just be looking into key profit areas. Probably 400, I'll probably lock in one contract, move my stop more to break even, and then going any lower, again, locking in profits at 385, another one at 375, 360 is probably where I'll just lock in the bulk, because again, I probably don't want to be holding this position forever. Especially, again, implied volatility is somewhat going to be high because the market's been so volatile recently. Again, depending on how you're trading this, these are all key things to note. If you're trading options, again, always be paying attention if you're looking to hold it longer term, implied volatility, because even if the position goes in your direction, if implied volatility starts to drop, you can still lose money. So again, that is really how I'm looking at it. From 400 up, I'm looking to trade this more short bias, mainly true options or option spreads. And that's my main outlook. But again, use these levels however you will. These are just levels where we expect volume to increase, and again, the first time you hit them you expect a pullback. If you touch them again, you're waiting for the breakout and test it as a support, and then it should carry on in the direction. Anyway, I hope you enjoyed the breakdown on Goldman. If you did want to, drop a like and subscribe and check out one of these two analysis videos.